Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny, and today we're going to talk about holy crap, the market whipsawed like insanity today when the whole Federal Reserve report came out. It was pretty wild to watch. I actually was very fortunate that I could watch it live. It was like all over the map. We're going to talk about what the hell they had to say and kind of what our take was.
And we'll look at the terrifying chart. If you like this kind of entertaining stock market content, go ahead and give us a like and subscribe as we try to figure everything out and not look like an idiot.
We are idiots.
Pretty much.
Two Super Guys Trade Stocks.
All right, this is basically what you're seeing for the headlines. It's pretty broadly across the whole board. Federal Reserve expects to keep key rate at 4.6%. That's what they think their target is going to be as far as what they're going to hit for a maximum. By the end of this year, they're looking more in like the low fours, 4.4% by the end of 2022. Today, they hiked it 75 basis points, took it to 3 to 3.25, meaning they still have about 1.2% to 1.25% left to go this year alone. That's pretty crazy, isn't it, Dylan?
Yeah, it's only September. And it's already September, not only September. I will say it's making that TLT Michael Burry trade very sexy.
Well, he's been out of that for quite a while. But yeah, definitely, logically, it makes sense. You're certainly seeing he talked a little bit about real rates having to be positive, meaning like above this PCE inflation that he talked about, where it was like the mid 4%. So it's looking like they are going to have to follow that traditional kind of dogma of bringing the Fed funds rate above this inflation rate in order to control it. And it's going to take a little while.
Yeah. So, but me and Vinny, we both listened to the actual the call, and what he basically kept reiterating was that they are going to apply downward pressure. They're not going to be afraid. And the biggest thing they're afraid of is letting up too quick, too easy.
Yes.
So it's not going to be a fun year.
No, definitely not. We totally expected this. This is what happens. It has to happen. You get drunk on freaking Fred stimulus. You have to have a little bit of a hangover before you go out and do it again. That's just how this works.
That's a good analogy. That was sexy.
Is that what we're doing? Oh. Yeah, exactly. But that's where we're at right now in terms of kind of predictions. If you've never seen this before, this is called the dot plot. This is what the Federal Reserve uses to kind of like show where all the Fed fund governors are voting in terms of where they think interest rates will be. And if you look at this, through the end of 2022, we have that low 4% kind of mean. And then it goes up a little bit more into 2023. So it's still going to be increasing rates probably next year is what they think, beginning part of. And it's not going to be very much. Majority of it will be done in 2022 as long as things stay on the current course. Okay.
Yeah.
After that, we kind of get this dispersion factor where we really don't really know. 2024 is like a crapshoot, and 2025 are coming back down to reality as far as like a more typical, quantitative, kind of bullish, I want to say, sentiment as far as the market and the Fed funds rate effect on that. But what I really want to look at is what effect did that have immediately today on the charts? Because it looked insane from what I saw, but I don't have level 2 data like you did.
The charts are wild. Let's get to that real quick. Before we look at that, quick question. They had made a point way kind of a long time ago that their whole plan is they're going to increase interest rates and sell mortgage-backed securities. Now, you did a pretty solid video looking at the mortgage-backed security holdings and how it's actually been growing. Someone asked, why aren't we doing this? Okay?
Yeah.
And he kind of said it's too early for the mortgage-backed securities right now. How do you feel about that?
Yeah. So kind of a twofold response there. One, it's unfortunate that they're not following through with what the plan was that they laid out. They are decreasing their treasury holdings, but the Fed is got enormous. You're talking about $4 trillion that they added to their balance sheet during the whole kind of COVID pandemic response. So they have a lot of stuff they need to sell in order to get back to where they were pre-pandemic. And they haven't really done a whole ton of that yet. They were talking about doing, I think, $30 billion in MBSs, and they haven't really done any. It's been basically flat to growing slightly. He said that they're now done buying, and that he didn't say that today, but it's been discussed that they're now done buying, and they will be selling them at some point, but they didn't say when. But he's a little bit worried in the fact that you can tell, he said the housing market is like the area in which they're seeing inflation kind of cool off the best so far. That's where they have the most profound effect. That's where interest rates have the most profound effect. And that is a segment which has definitely shown some signs that inflation may be cooling a little bit, but still very, very soon.
All right. So this is the chart, okay? this is when he kind of started. Well, sorry, he started talking at about 228 or something, right? But the points came out here, all right? So he starts talking about here, and it's going up. In my opinion, this is just mean. This is the SPY and the Qs and all the hedge, people like Citadel doing bid and ask stuff. This is called a bull trap. They really, really kind of shit on people here. Went all the way up and then just tanked. Nothing was said that was unexpected. He even opened up. His speech was saying, hey, nothing has changed. I will be reiterating everything I said in Jackson Hole. Nothing was new, right? So this was mean. But look at this friggin' change. 387 on the SPY down to 380 in 5 minutes. Okay? Back up to 389, all the way down 377. This is in an hour.
Yeah.
Like
It's kind of like when you flush the toilet and the water level comes up first,
This is just ridiculous. But here, let me move my face. You got to see this volume. This is some sexy volume. All right. So I did a video earlier kind of showing that we're in a channel of what I would call distribution. We're kind of hanging out. Everyone's accumulating, distributing shares. This is, I feel like we're going to be here for a little bit between this 390, 362 level. We are smack dab in the middle on some real high volume. All right? Okay. This was a lot.
Yeah.
Oh boy. And I think this sums it up.
Emotional damage.
Can't get much better than that.
Yeah, I would agree. Definitely got some whipsawing going on there this afternoon, which was pretty crazy.
Yeah.
But,
I will say,
quo.
I got pretty lucky. MU was shooting up in the beginning of the day, so I put a limit order knowing that I was feeling this was going to happen, so I got a pretty solid bounty because I have my account automatically set at 359. Pretty good day.
Nice.
Pretty dope.
You know what I actually did today, too? Speaking of stocks, I bought some more Google.
Okay, that brings me to my last point. Facebook, Google, getting real sexy prices. We're going to do a video on where these prices could go. If the SPY goes back down to 365, this could be a solid buy time. All right?
Yeah. I mean, I saw Google break 100, and I was like, damn, you need to get me some of that.
Dude, crazy. All right, guys.
Yeah. Let us know what you think. Catch you in the next one.
Have a good one.